Government shutdown, no shutdown, end of quarter, a lot to cover, and let's do it concise and get to the point. I think the most important thing that we could focus on here is what did the S&P do at the end of the day? It is pretty clear that they're heading towards a shutdown, and the market rallied anyway. Super interesting, and I want to use the S&P because there's this huge JP Morgan collar out there. But I think this was really interesting. If we actually look at what happened today, just by looking, we did the undercut of that doji, just took everything that you could get, and then they just ripped it up. Now watch that line, and I'm using the S&P 500 versus the futures market on purpose. So really all they did was come down here, get what they could from all the stop hunting, and then just rip it. And then look where they really ripped it, right into the end of the day from 130 on. What did it do? Just straight up. It was just literally a rip from straight up. Even when they knew a shutdown was going to happen, they didn't care. They still just went out there and said, we're buying, boomer. And that's what they did. So super interesting to see, to say the least. But if this is not going to slow us down, then the real question is, well, what is? If the shutdown's not going to do it, the end of quarter's not going to do it. You can see the break straight through. And then you look at the last 10 minutes, it's just straight buying again. It's obviously very good for the bulls. And there's a couple things here that I think are really good for bulls. And we're going to go through a couple of them. We're going to follow up on them because I got asked to from yesterday. But there's some things here that I really want to hammer home. So we have the end of the quarter. So we had major rebalancing. Now, for those that don't remember, last quarter's rebalancing, if you just go and take a look here and you go and see that area right here from Monday, Friday, in this whole area, you can see it, and it doesn't look like much now, but between that and July 4th, we were all over the place. It was a little difficult to deal with. It was about a 1.5% move, but what we have is we have the unwind of the JP Morgan collar, and we have the new collar put on, and I'm going to show you where that is, and I think that this is really important to get. So really what they're doing is right at this level, 6,200. So what they're doing down here is they're doing a put spread, and then up in here, they are selling calls, and they're selling calls right up here. So really what they're saying is that the market's probably going to stay in this range, that 69.50 range, and we're not going to break 62. So what they're doing is they're getting the credit from this, and then then they have this put to pay for it in case the thing gets out of hand. So I thought this was really interesting, the way that they did this. From my perspective, what's it mean? You're probably not breaking 6,200, and candidly, it probably means that you're going to grind and pin towards like 69.50. And if you want to get super technical, they would pin to the time to where they did it, meaning that not only would you pin to 69.50, but you'll probably pin to what they paid for it. So it probably gets you a 7 handle, and we can mark this off right here and take a look at it at the December 31st. But it really tells you that, yeah, they think we're going higher, and they certainly don't think that you're going to drop anywhere near this, or they wouldn't do something like that. So that really puts you at like a 7%. And it doesn't mean that they're right, but it's pretty interesting, and they're usually fairly accurate for the range that you're in. They can hedge it, but it does show you where our collar now is going to be on the market versus where it was before. And I think that that is a significant hurdle that's out of the market. Also, we had some real significant moves today when we watched where money went. But before we even get into that, there's some things we should really talk about I want to follow up on. So I showed this yesterday, and I got asked to follow up on it today. And this is the S5FI graph, NDFI, and you can divide these two. But what we saw here today was we saw the dropping of this yet again, meaning that the NDFI on a percentage basis is getting more names over their 50-day on a percentage basis than the S&P is. Well, that's exactly what you want to see, and that's exactly what we're getting. This is bullish, hands down. The other graph that I got asked just to follow up on, and I'm more than happy to, I do read the comments, and as long as you comment on it, I'm more than happy to go over it again. You can see the DTL right here on the NDFI. Anybody can pull this up. It's not mystery. It's not proprietary. 100 stocks, right? NDX, percentages that are above, and you can see what's going on here. Test, test, test. And I was talking about this DTL and how we're setting up to break out, and now you can see that breakout is happening. Super interesting time. Because if we flip this, it's actually a buy signal. Once you get back over the 50, it actually gives you a buy signal, and that's going to negate this divergence. So this is pretty fascinating stuff. I want to cover those two, and then something else that you usually don't see going into a recession are names like Nvidia coming out and breaking out and hitting all-time highs. This is something that I really wouldn't sleep on, and I'm going to just show you why. This is a left head and right shoulder that is inverse. When the right shoulder is more developed than the left shoulder, you want to pay attention. And if I go here, and if you guys have been watching this channel for a couple of years now, you know I have Nvidia coming out of the ears at this point. But remember when they said CoreWave was a fraud? But if we take a look here at that left shoulder, and then we'll go here and we'll draw that head out right in here so that you can kind of wrap your noodle around where I'm going with this. And then this is the right shoulder. Now the right shoulder is more developed, meaning it is lower than where you are here. Some people might even refer to that as those dragon patterns, right? But what's so fascinating to me about this is that when this happens, it does lead to a much stronger breakout than when people are used to. So I would just say that, yeah, I do think that that's coming. And I do think that you're going to probably have a two-handle on this pretty soon. I've been saying this for some time. People's sense of where this is supposed to be versus where the PEG ratio would be historically, it's at a discount. And people still don't seem to be getting that. But more for me, I guess. $4.5 trillion, and people seem to think that that matters for some reason. I'm not really sure why people think those numbers matter. I always found that fascinating. But I do think it's important to just say, okay, where does that put us? And I'll explain what I did there so that you can do it for yourself. What I did was I measured the size of the base using Fibonacci levels, which are historically pretty good levels to use to give you a sense on where the masses are going to get tired, right? Like where that exhaustion might kick in. And you can do your own rating on Fibonacci. So it's going to take you to that 200 level. And then if you flip that, you're looking at the 220s. But I would think that at this rate, you probably are looking at that two-handle probably sooner than we think. And I think we have to look at it this way. If you're repositioning on September 30th going into the end of the year, well, pension funds bought today and they rotated into names. All you have to do is go look at what was bought today. That's not retail. That's not mom and pop and the kids on Twitter that are getting Nvidia to do what Nvidia is doing today. Super important to get that side of this. So I do think that if you start seeing the big names like this break out, yeah, it's super interesting. And then if you take a look at Microsoft, you've had this 520 level I've been yammering on about forever. Do we get through that? I'm not sure, and I do want to spend time on Tesla, but this was fascinating to me. And then you looked at Oracle, and for once, even though it was another suck salad today, you just didn't fall apart. And I also think that despite what we're seeing in the market is skittish. And when the market is skittish, guys, we don't go down. And I'll show you what I mean by this. So if we take a look at something like BE today and how they just trashed BE, right? How it came all the way down. And then today you're getting that short squeeze on the move. And obviously that's not institutions that feel that they have to jump in right away. When we start to see that, that is telling me that people are like, man, I know I shouldn't have sold that thing, and they're getting back in. But you also have the short squeeze size of it. When you see that, where people aren't afraid to short heavily, get hit, and stay in the short, that's telling you something. That's telling you that you don't have enough of greed in the market. And we saw that a couple times this week. We're seeing patterns. I'm a pattern trader. So not only like stocks and looking at the charts, but I'm trying to always look at patterns. So when I saw this with LEU the other day, I'm like, oh boy. Because you see it right here at the 265 level. And that's what I said to myself. I said, oh boy. So when you see it break out and push, everyone's like, oh, well, it's done. Really? Because it hasn't gone anywhere. It's just holding in here. And I think that's really important to get. And you would say, well, what does that have to do with BE? I'm a pattern trader. What happened here? Well, we had a huge breakout. And then what happened the next day here? Well, it pushed out and then it put a top in. Okay, so what do you think might happen here? Right? Same soup reheated, different names, different numbers, but it's the same soup. So if you think about it that way, it starts to make a little more sense. Fear and greed don't go away. Human behavior doesn't change because of an algorithm. So just understand that, and you can start wrapping your noodle around this stuff a little bit better. I think this is very important, and you probably do get another push out of that. But again, when they're selling these key names down, what are they doing? They're buying them up, IREN. All of a sudden, everyone had to get out now. What happened? Oh, I better get back in. Look at the close. You're almost at an all-time high close after, oh, I've got to get out in a 20% drop. And this is exactly what I'm talking about. If we're going to be driven by a force, it's important to understand what the force is. So the force is not the shutdown, right? So like if I just went here for a second and said, all right, the force is not going to be what? The shutdown. That's clearly not what it is. The force is not going to be tariffs. That's clearly not the issue. The force is not going to be unemployment. We're clearly seeing that. No matter what happens, what are they doing? They're driving us higher. So what is the force? Because when you figure out what that driving force is, then you can pay attention. And I'm going to get into this on Saturday, but just tell you what it is. It's earnings. If they have the earnings, they're coming into the market. So one key thing about this market that people are not getting, 60% of the move that we've had in the S&P is based upon earnings growth. 60%. So it's not just PE expansion. There's two ways that the market will go higher, right? There's just only two. One, you're going to earn the same amount of money on the S&P if you look at it all together, but based upon interest rates dropping, the equity risk premium goes up and therefore the PE will expand, right? And then if the rates get too high, the PE contracts. But in this case, the PE goes up. All right, cool. Got it? Great. What's the other way that could happen? What else would take stocks up? Earnings. So earnings can go up and then the PE can stay straight or even drop. It doesn't matter. But if earnings go up, then stocks are going to go up as long as the PE remains the same. They're the two ways. Right now you're at 60-40, which tells you that we're in an earnings-driven model. So what does that really mean to us? And you're like, okay, thanks, Rocky. What do I do with this? You need to just make sure that the companies that you're looking at buying are having earnings growth. And if they're having significant earnings growth, they're going to go after those areas. If that earnings growth is challenged in any way whatsoever, they are just being merciless with these names. And I think that's exactly what you're saying here. So you got to have the growth, because if you don't, it's going to be a problem. But if you do, then you're set. I wanted to show this too because I thought it was fascinating. If I said to somebody, hey, what is the best sector since August? How many people would have thought it was the pot? I wouldn't have thought it was pot. I wouldn't have thought it for a second. But there it is. It's actually outperformed gold and the gold miners. And this is what we're looking for, those themes. And we're getting them right here, aren't we? We're going to have that clean energy, uranium, and we're going to have the drones, which is UFO, and solar, China. You're seeing the themes over and over again, quantum, biotech. This is what's driving us, and it's outperforming the semis at a massive clip. So this is where we should be focused on. I don't really play with the pot names because they're too small. I might bang around the MSOS. I do own gold, and I really don't do anything really with solar. But the rest of those names, when I go back and take a look at it, and I always study this stuff, we've absolutely killed it with the uranium names and the drone names. Just absolutely slaughtered it. I don't know that theme's going away, but this is something really important to pay attention to. And speaking of growth, if we take a look at Tesla, the one level that I will tell you that you have to watch is this 445. You can see these levels and how specific they are, but that 445 has just been really difficult. If we can't get above it, that tends to be the issue for whatever reason right now. Why, no, why? But you have a ton of options there. But you held yesterday's VWAP. You tested it, you held, you came all the way down to 30, and it's turning into a trading name up here, which is not really what I wanted. I wanted the breakout and the push. Now, you do have deliveries coming out this week, and the question is, are you brave enough to hold into it? You know, I like closes like this, but I think at this point, you're better off just waiting. I do have a position in it, but I'm just going to give you my 2 cents. Like when you start to see this stuff, it does give me pause. You should have had more follow through today. So I'll take a look tomorrow for pre-market and what we see in the option book overnight, if there were any changes that, and I'll bring it up in those public pre-markets that we do for everybody, because I know that everybody likes those. We start at 8:15. Feel free to follow along. And if we take a look here, I want to go through Nike because I think this is important. Nike beat, and the revenues were good. And I actually like the gross margins, even though they were lower. But what I saw that I don't like, and I'm waiting for them to explain it, and if it's down, this is why it's down. And I would suggest to anyone to start learning how to read a balance sheet. But what is the issue here? What is the really big issue here that I see with it? Inventories. Their inventories were through the roof. So they're producing goods, and even though they dropped their gross margins, they're not selling product. For whatever reason, it's just not, that hip, cool brand anymore. Now, today we had a really great trade in Target, and I just want to walk through this. There's rumors of private equity here. And when we get these private equity rumors, whether or not it's true or not true, this is actually perfect. I mean, it's actually textbook perfect for, like, there's your bottom, here's the lower bottom. I mean, show me a divergence without showing me a divergence, right? And you just look at, it's literally perfect. I don't know how else to say it. It is. I shouldn't get way too excited about this, but it is. And what you're seeing here is the rumors now that, hey, by the way, we're pretty much looking, and they've had issues with their CEO, et cetera. And it's just been an absolute dumpster fire, man. Like they have absolutely destroyed their brand like no other. I mean, they've just done such a great job at just like destroying the equity of the company. For whatever reason, we can get into it or not get into it. I don't really care. All I care about is how do I profit from it. So if we take a look at this, you could see where we were and where we were a year ago. I mean, it's kind of crazy how where you are. Now, are you at that trough valuation? Well, you're at that pandemic level, And you see these guys with PE, the PE money starting to foam at the mouth. Why? Because they're going to cut interest rates. And when they start to cut interest rates, that's when this gets really interesting. I do think that there's a place here for PE on this, private equity, a private takeover. But that's also another sign for us, guys. It's another sign, like, you don't go out there and start doing private equity deals if you're in a tough environment or if you're in a recession. They don't do it. And we just saw this massive $55 billion deal that we were talking about this weekend on EA, and they got involved there. So, they're paying up on these names. You don't do that if they're expecting a slowdown, and those guys are pretty plugged in. So I think that's important. And something else that I just really want to point out today that I noticed, and I thought that it was interesting, worst performing sector out there was the Russell today. Now, a secondary note, you're starting to see the Department of Energy try to figure out where they're going to get their energy from. OKLO was out there today, and they got a couple upgrades on, as far as their earnings projections based upon some of these deals. So some people are starting to come out there with some real numbers now. You might want to start watching the tape on this. I was really surprised by it. I actually have a short on it right now. I had 3 or 4 very positive pieces of information. And when they started to rally, they're just providing such great opportunities to short. Like they literally just, it's so funny how easy it is, because it's literally just wait for the bar to just wait for the extension, and then that's pretty much it. And it's all over the place. You can see them. And that's perfect devil horns, right? And then it broke. So they're presenting great opportunities to short. I could get run over here. If they don't do the secondary that they've been talking about, or let me rephrase this, if they don't do the secondary that I've been talking about forever, on the short side, I can get run over here. What tends to be working for me very well is because it can't turn it as fast. I've been shorting this OKLL on rallies. Super easy to get in and out of this thing, super liquid. And you're just watching pops like this, and you literally just you're putting on size too. Like right there, it breaks down, there's your stop, and then it just kind of worked out much, much cleaner, candidly, for me to do this than to do the OKLO. And I don't know if that's because they have to go into the option market or not, but if you're shorting this on spikes like I am right now, waiting for the secondary, I keep waiting for the secondary, still not here. I found this pretty fascinating. The other thing is there's this other name now that also is getting this contract, and I was not aware of it, but apparently this SPAC is going to be another uranium company. I don't know why this one trading with zero in revenues can't be as great as these others with zero in revenues. So you might start seeing this name come out a little bit more, HOND, and you might want to pay attention to it. That is it.